FAANG stocks soaring this week on the hopes of positive trade news over the coming weeks. We also had earnings from Google. Tesla shares skyrocketing this week on terrible earnings, but positive notes as it relates to regulation around self-driving cars. We've got earnings next week from Meta and Microsoft on the 30th. That is Wednesday. And then on Thursday, we'll hear from Apple and Amazon. We'll wait another month to hear from Nvidia, but we'll not wait any more time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. Let's kick things off like we always do with Meta Platforms. Started the week at $491, and someone lit a fuse because this one's up 11% before earnings. Where most of these companies don't make a lot of news, we do have news out of Meta as shares climbed to $547 per share. I've got big news. Equity Empire is on fire. We are overwhelmed by the number of people that have subscribed. Thank you so much. My partners are saying, Colin, we have to raise the price. You can't keep selling small cap research and big cap research. If you're from the newsletter world, just small cap research is $1,400, $2,500 or more. You get both blue chip and small cap, and nobody's doing blue chip like this, where they continually cover the companies. I also gave blue chip buy alerts on the 12th, recommending 7 stocks. I had one subscriber email me and say just that alone paid for their entire subscription for the next several years. As you can imagine, if you sent out buy alerts on the 12th, based on where these stocks have gone since then, you can imagine there's some people making money. Links down in the description below if you want to join us. Now, Meta's oversight board is concerned, as they normally get concerned, about the content policy. As you know, Mark Zuckerberg kind of lightened up the touch of their content policy. It was kind of a ban first, ask questions, maybe secondary. Now the content has to be I believe this is the policy, has to be blatantly like hate speech or something like that, which obviously has some shades of gray, or it has to be like reported a number of different times. Meta taking a little bit of X's approach where they try not to platform a lot of this kind of nonsense speech. They still allow it on the platform, but it just gets less reach. Now, part of investing in big tech is just understanding that these companies are constantly going to be under pressure, constantly facing fines and those types of things. In the EU, you're facing a 200 million euro penalty for Meta, which is, for you and I, probably like $20. Dozens of French media firms are suing Meta, saying that their dominance in the digital advertising space was based on illegal practices. And again, you just have to put up with that. If you're going to invest in big tech, you're going to get sued, you're going to get fined, but you're probably going to make billions of dollars of free cash flow every single quarter, as we got to Google. We'll get to that in a minute. Now, this week started with Meta having 7 straight sessions in the row in the red. And I tell you what, you don't need to be an expert in picking stocks. If stocks are down 7 days in a row and they're red and nothing has really happened, probably a buying opportunity. Moving over to Apple, start of the week in 193. The positive, we've got positive momentum. We don't have positive news on the tariffs or the trade talks, but the momentum is probably good enough for Apple to send it up 8.5% to finish the week, close to $209 per share. Now, they are looking to shift all of its U.S. iPhones to be made in India by 2026. So rapid shift there. Some believe this is causing China to have to come to the table, at least as it relates to carving out some exemptions so you don't lose a big customer like Apple and potentially others shifting over to India. Apple is rumored to have a robotics unit that is working discreetly inside of the company. It'd be very exciting if Apple gets into this space. Really think they should try to push hard in there, because obviously you have Tesla, you have many, many other companies that have some working versions of robotics, but obviously if Apple gets in there, could be an absolute home run for the company. Now, the new Siri boss, who used to be in charge of the Vision Pro, is bringing people that helped launch that project into Siri. Now, Vision Pro was a massive flop. If you'll remember here on the channel, even before it came out, I said this was going to be a massive flop. I said they were $4,000 ski goggles. I am not super price sensitive on a lot of things, but there was no way you would extract $4,000 out of my pocket for something like this. History has proven that nobody else pretty much does either. Now, the one positive about Vision Pro is they actually shipped it. They actually came out with the product. Siri has been bogged down with different types of upgrades and promises, and so maybe the Vision Pro guy can actually ship a product there. Now, moving on to Amazon. Started the week at 168, and a week before earnings, Amazon reports their earnings Thursday, the 1st next week, up 12% to $189. Those trade talks probably good for Amazon. It slid earlier in the week, though, as I believe you have analysts out there that either, I hate to say that I don't think that they understand the semiconductor business. I think the analysts over at Wells Fargo are trying to play games, and maybe it's this complete cynic in me. I think the rumors that we're seeing put out about AI slowdown, data center slowdown, I think it's put out there so these people can actually go out and buy more of these stocks. Because if you have your head even halfway screwed on, you can tell that semiconductor demand is off the charts. Demand for data center is off the charts. Demand to build software for the data center, for the enterprise is off the charts. All you have to do is go look at ServiceNow conference call. It is off the freaking charts. Google, obviously, posted huge cloud growth this quarter. And so I think this is just plain old market manipulation. Don't be distracted of it. In fact, Nvidia and Amazon came out very quickly, including a LinkedIn post, among other things, talking at a conference, basically saying AI data center demand is not slowing. And in fact, many ways, from what I'm hearing and what I'm seeing and what my research brings up, it's not slowing down. It's not even plateauing. It's actually accelerating. Company is having problems sourcing Project Kuiper satellites. These are Starlink-like satellites, low-orbit satellites that they're shooting up into space to launch kind of an internet service, very similar to Starlink. When I was at CES, they had some of this on display, not the satellites that go into space, but kind of the device that you would put on your roof. And the person manning the booth was very open and saying, yep, they're going to undercut Starlink. So this could be a very interesting product. I think they're going to come to the table with a very competitive thing. But they need to not only launch these satellites up, but they also have to contract SpaceX. So essentially their competitor in a lot of ways, but also Jeff Bezos's Blue Origin. Instead of sending Katy Perry up into space, they've got to send more of these satellites, which they're having trouble getting. Now, moving on to Netflix, start of the week at $1,000, up 10% to $1,100. And I've talked about this a few times on the show when we get to the technical segment. Netflix has kind of led to the downside. This was like 2 or 3 years ago when we had kind of that major drawdown in the averages. Netflix started it, but it was the first one to the uptrend. And so when Netflix broke to the new highs, it's going to drag the rest of these FAANG stocks with it if history plays out. And speaking of playing out, Netflix would sure love to achieve a $1 trillion valuation, which at current price would take you to $2,200 per share if there's no split, which I have to imagine probably is coming at some point for Netflix, probably when the top is in. That's probably when the split will come. YouTube turned 20 years old this week, and it's capturing 12% of the overall TV viewing market, which just shows you that, look, you've got some big units inside of Google. If Netflix is worth $450 billion or $500 billion or eventually $1 trillion, how much is YouTube worth, considering it actually has more viewers and more time spent? Obviously, Netflix would love to catch up there. Moving on to Nvidia, start of the week at $98. This has like been the 4th week in a row, or at least the 4th week out of the last 6 or so, where I felt like we've started at 98 with Nvidia and finished at 110. You're up 13% in a week on Nvidia. Finished the week at around $111 per share. Their supplier, SK Hynix, which supplies high bandwidth memory, continues to be on fire, as you obviously need more and more memory surrounding the Nvidia GPUs. Obviously, China's coming online either with their own proprietary stuff. They're cramming as much HBM around everything. And again, the next generation that is coming it just has more and more memory surrounding it. And so that is a great trend for Nvidia. They don't report earnings for another month or so. Over on Equity Empire, we'll be covering Lam Research and Intel later this weekend. Moving on to Google, start of the week at 150, and after the company announced earnings, shares climbing 8.75%, finished the week close to $164 per share. The company announced their earnings, 12% growth, which beat expectations and really was towards the high end of expectations at $90 billion. I did a full video here on the channel. Make sure you go and watch it if you didn't. People seem to enjoy that video. I'm not exactly sure what I did in it other than show you that Google is such a wonderful company and trading at 18 times forward. I was looking at companies like IBM and Chipotle and many other companies. I do believe all of those companies have a price to earnings that is more than Google, and neither of them have a growth rate that is big as Google. And then when you look at operating cash flow for Google, it was $12 billion a month, not $12 billion a quarter or $12 billion a year. It was $12 billion a month for $36 billion of operating cash flow. You can imagine it's probably pretty good for you, the shareholder. NHTSA is going to ease some safety rules on these self-driving cars. I was actually reading this. It was insane. Like, American cars were not even allowed to be like AVs, autonomous vehicles. So now they've actually cleared the way from that. That's probably good. That's going to allow Waymo, which is a division inside of Google, which they kind of hyped up a little bit on the conference call, but they tend to give you an update on the amount of rides that they're putting out. And then they're doing absolutely fantastic. And the markets that they are kind of dominating is the San Francisco and Los Angeles out here in California. They've partnered with Uber in the great city of Austin, Texas, and they continue to expand to other markets. It's going to allow them to use other platforms, other devices, because it's more of it's kind of a modular system that Google is running with. They have all these sensors. You've probably seen these Waymos. They got all these things around them. So you can actually convert some other cars. I actually saw that at CES. They were likely prototype phases, but you're going to be able to potentially bolt on sensors onto cars. That's why some people have concerns when we get to the Tesla. They're obviously using more of a vision or a camera approach. There's a potential, if Tesla is not able to perfect that, they're going to be able to bolt on or, magnetize something onto the roof, and that probably should be good enough, and all the other cameras. So it's probably not all as lost if Elon Musk doesn't get his way and not use LiDAR or one of these other sources to drive the cars around. Alphabet CEO saying something absolutely ridiculous. I'm going to say right now, none of you guys should do this, okay? And I've seen people talk about this like it's a good idea, like personal ownership of a robo-taxi. Now, I can understand if you own one of these robo-taxis and you're sending it out in the fleet and you make some money in with it and it comes back in your driveway and it's like an Airbnb. Okay, if that's the business model, that is fine. But don't buy a freaking robo-taxi and park it in your driveway like a normal car. A car is a depreciating asset. You should not be buying cars. You should lease cars. You should not buy depreciating assets. You should buy appreciating assets. Things like houses, things like stocks, things like jewelry, things like anything that goes up in value over time. A car is a terrible, terrible investment. Not only that, but if these self-driving cars exist, it probably means instead of having 2 cars, 3 cars per family, you can go with one, and when you need a ride somewhere, you click a button on an app and then one shows up. I can't wait until these are everywhere. I am going to go down to one car, be a 1-car family, save $1,000 a month in maintenance, payments, insurance, all the BS it has come with owning a car, and I'm going to rely on this. It's going to be one of the best things and one of the most cost-saving things that is going to come to society over the next just 4 or 5 years is the fact that you're not going to have to own 2 cars. You can afford to own just simply one, or in some cases, no car. And these Waymos or Teslas or whatever they end up being will come and pick you up, and you'll only have to pay a couple of dollars per ride. The DOJ has it out for Google, and they're saying that the company must be prevented from using AI to boost its online search supremacy. We'll see if the DOJ gets its way or not. OpenAI really hopes that the DOJ gets its way. That is because they have interest in buying the Chrome browser from Google. I'm sure Microsoft would love that as well, as they obviously have a stake in OpenAI and a stake in the browser game for many, many years, many decades at this point. Now, Gemini has monthly active users nearly quadrupling in 6 months to 350 million. Back in October of 2024, Gemini averaged 9 million active users. Where are all these people from? Then 35 million in March. Now they say their total monthly active users on Gemini is 350 million. That's like the entire population, I believe, of the United States. So again, this is what supports when I see rumors of data center cutbacks and, we're cutting back on data center. Nvidia's not really needed that much. No, in a year, you went from 9 million to 350 million users. And pretty much nobody's using this AI stuff. And so this is extraordinary. The demand is off the charts. Now, Google is telling some remote staff that we earn $36 billion of operating cash flow, but you need to come to work or we're going to fire you. It sounds like they want to fire them and they're trying to look for an excuse there. Part of the DOJ's case is they say that Google uses Android to negotiate exclusive agreements with other handset makers like Samsung and others to force them to, default the Google search engine and also Gemini AI. And so obviously I think Google will probably have to tone that down, but I think their product is going to be good enough that it won't really matter. Now we've got 2 decades, 20 years of YouTube. And I've got to say, YouTube has absolutely changed my life. I always wanted a career in finance, but I didn't want to work at these big banks. I don't want to work 14-hour days and then, work a decade just to work your way up to partner. And you have to live in these big cities. It's a terrible existence, in my opinion. I want to be able to spend time with my family, my kids, and be able to take a weekend off or a weekday off and just be able to do that. You really can't do that in the finance world. But because of YouTube, I've been able to get into the finance world and share some of my knowledge, learn from all of you, and we all get to learn together. And so I appreciate Google, appreciate YouTube for everything it's done in my life and for my family. Truly grateful. Now, moving on to Microsoft. Start of the week at 363. Microsoft will report their earnings on Wednesday the 30th. So we're just, a couple days away from hearing from Microsoft. If Google was any clue, and ServiceNow as well, results for Microsoft probably going to be pretty good, and investors are preparing for it as shares rose nearly 8% this week to finish the week close to 392. OpenAI is also saying, well, no, guys, there's no slowdown in the data center because our revenues are going to balloon nearly 1,000% by 2029. How is OpenAI's revenues going to soar 1,000% without a bunch of data center CapEx spending? That is because, and that is why the company is committed to so much data center spend and got the guy over at SoftBank to donate billions and billions of dollars because they're going to need it. Moving on to Tesla. We hit the full self-driving with Tesla as shares started the week at $229. The company reported earnings that showed a decline in sales, decline in operating margins, decline in cash flow, decline in basically everything, decline in brand reputation. But shares of Tesla up 24% as investors are banking on the fact that maybe, just maybe, it just won't get any worse for Tesla. We've seen the worst of it all as shares climb to $284 per share. You want to see this one technically. I think we've got a new formation over at Tesla. Now, like I said, those Q1 revenues came in, decline of 9%. Revenue coming in at $20 billion. It missed full year expectations or missed quarterly expectations. We pulled the full year guidance. Basically, Tesla waving the white flag in terms of tariffs and all those types of things. If you do get a drop in interest rates, if you do get the full self-driving and all this other stuff, the robotics, then, the back half of the year could be good. But Tesla has set the bar so low. Not only that, next year they're going to be comping these disastrous results. You also had Elon Musk saying that his Doge work is mostly done, and that's starting, I believe, in May. So just another week from now, he's only going to spend, in his words, 1 or 2 days working for the federal government, and he's going to recommit time for Tesla. So that's probably good for the shareholders. Now, the company is showing off a glossy new video where they show their ride-hailing app that is already being tested in Austin, which is not news, but the San Francisco Bay Area was a little bit of news. They've completed 1.5K trips. Now, this is only internal testing. It's also, as you can see here, it's going to have somebody in the front seat. The full self-driving software is being initiated, and I can tell you, just driving around in San Francisco in the Tesla with the full self-driving, I would say it actually performs better in San Francisco on streets where you have, 1 lane, 2 lanes, and then you got a UPS guy over here, and then there's, a homeless guy that's all cracked out coming across the street. It's swerving in and out of all that stuff. In my neighborhoods that are like flat roads and easy as pie, it struggles sometimes. So it's interesting. In the Bay Area, it actually performed quite well. So they're doing some testing there. This is for employees only, but they showed off this mobile app. They showed off kind of the functionality, like once you get in the car, there's a little screen on the back. And those of you that don't know, some of people are saying, well, where are these cyber cabs that they showed off last year at an event? No, the cars that are going to be on the road are the existing cars. So it's the existing Model Ys that are going to be able to drive around. Initially, it's likely only going to be fleets that are owned and operated by Tesla. But the envision is if you have a Model Y or maybe even a Model S or one of these other ones, you can send it out into the fleet. Now, that's probably a slightly longer term vision. Whether that's longer term later this year, next year, or into the future is anyone's guess, but Tesla already has cars that can do this. So whether or not they can get the regulatory approval. I use full self-driving. It is sure as hell not perfect. In fact, it disengaged on a freeway trip I had on Wednesday. And so would I really be excited about getting in one of these things? Not really, but it does work to a certain degree, and I'm sure Tesla will work out the rest. Now, they are moving closer to an India entry as it looks like they're refunding old generations of Model 3, hoping to re-engage with those customers. As it appears, talks with India are going relatively well. There was a news report this week that the trade negotiations with India could actually be one of the first to be agreed with. It looks like India is taking the opportunity to maybe step in front of China, a country that they probably view certainly as a partner in some sense, but also as a competitor on the global stage, as you saw the news story as it relates to Apple going from China to India. And so if India could become the hub, where if you leave China and you diversify out into India, well, that's probably really beneficial for the company. And all the criticism that Elon Musk takes, some of it I think is warranted. He does have a relationship and he is been cozying up to the Indian leadership. And that obviously can pay huge dividends, as I believe India is the 3rd largest car market in the world. And when you're Tesla and you need to grow into a valuation, unlocking the 3rd largest market, probably a good thing for shareholders. Now, also a good thing for shareholder is the technical pattern. I know some of you guys are watching this and you're going to take offense to what I'm going to say. So just put your big boy pants on, zip up the zipper, and just remember this is business. It's not personal. Many of you have what I call Trump derangement syndrome. Some of you have also Elon derangement syndrome. So you suffer from both TDS, EDS, or both. Here's my message to you is just look at the charts. Tune out all the noise, stop watching the news, stop watching Twitter and X, and look at the charts because the charts told you to buy last week. In fact, like I said, I sent out a buy alert on the 12th when the markets were literally bottoming. That is because the chart was telling me on about 7 different stocks that stocks were either going to rebound here or completely crap out. Those are the type of risk rewards that I really like. Because what often happens is all the algos on Wall Street and all the other traders are literally, it's not like I'm making up the chart or making up some kind of fundamental research or making up some kind of valuation that doesn't make any sense. The chart is the chart. Price is price. Everybody sees the same price. And as you can see here with the S&P 500, we reached the bottom of the channel. And what do? We bounce right off it. Now, does that mean the lows are in and we're going to make a new higher high up here at 6,200? I doubt it. I actually think we could retest these lows again. So my advice is probably bump your stop losses on any stock that you're not completely married to. Meta bouncing off a very logical level. Could probably expand my box here a little bit. Complicating the situation, like I said, with Meta is they report their earnings on Wednesday the 30th. If they go the way Google's does, you could see a pop in the after hours. New higher highs would be tough on this one. It would take you up to 790. I mean, gosh, they'd have to announce some serious stuff. But as long as you hold in this range, it's probably good for Meta. Moving on to Apple, also dipped well below what is typical kind of a buying range, although you could probably stretch this all the way down there, include kind of these 2022 lows. Just understand when you've got these longer term trends, stocks will wick down through them. Just like we wick through the top, just like irrational exuberant, the market gets a little overheated. We go over the top on the technical pattern. We also can go through. That's why I don't delete these. The minute we have closing prices underneath that, I have people emailing me and messaging me, well, the uptrend's over. What should I do now? No. Just wait, because oftentimes you overshoot to the upside, you overshoot to the downside, but it takes a big boy. You got to put your big boy pants on to buy Apple at this level, and that may or may not have been one of the recommendations that I made last week to subscribers. Now, Amazon hovering on now an area of resistance. This level right here at 189, that was resistance for the longest time. I mean, several years. Once we broke out from 189, we rallied to 240, and then we came all the way back, did more than a back test. In fact, we came all the way back almost to the longer term trend. Now, what was support turns into resistance again for Amazon to break up through 189. Well, they're probably going to have to put up some really good earnings on Thursday the 1st, and we'll certainly see what happens. My read is with the consumer, it was incredibly weak. You looked at Chipotle and Procter & Gamble and certainly the airlines as well. The consumer really tightened up starting January, February, certainly into March and April as well. That can obviously change. One thing that's a mystery around retail, though, is we're seeing a consolidation of spend. I heard this also from a credit card company as they're saying, well, they're still spending, but they're only spending online, Costco, Walmart, Target. They're not doing a lot of discretionary stuff. Probably okay for Amazon. As I said during the Netflix piece, this thing led us to the downside in 2021 and into 22. It was the first to start an uptrend. I remember doing these technical patterns. We were like, where's the bottom? Where's the bottom? And Netflix was actually the first to show that it was in an uptrend. It continues to be in an uptrend. We talked about that last week when it reported their earnings that, boy, this looked like a great buying opportunity, and it certainly has turned into one. You've ran this one from $850 to $1,100 in like 2 weeks. You've confirmed a new higher high, which means you're waiting for pullbacks on Netflix. And as always, you should know what to do if and when those pullbacks come. Nvidia's in a different spot. We peaked out technically. Some people think this is a topping pattern. It certainly is a topping pattern for the short term. We have areas of support here in numerous areas, 86, 95, 101. Right now, resistance is pretty hard with Nvidia at 115. We've hit our head against 115 basically for an entire month. You won't get earnings on this company until May 28th. So you've got another month to go. You will hear from AMD and a handful of other stocks as well, although the broader semiconductors that have reported outside of Intel, which has kind of a unique situation around their business, it's been absolutely fantastic. Google didn't come all the way to the bottom of the channel. It came pretty close. We have rebounded. Not convinced that Google is going to rally up and to make a new higher high until maybe that DOJ case. You get maybe that, first of all, that ending, and then potentially maybe some positive news out of that. But obviously next week with Meta and Microsoft reporting, that could continue the rally with all of these stocks because they'll likely report relatively good earnings. Microsoft stock, at least in the shorter term, is looking like Nvidia. You've made a rounding top. Some people believe this to be a topping pattern, although you do have support for shares down here at 355. We've wicked through here a few times, but you can see it's a clear area of support. Resistance on the way back up is basically where the shares are right now. And so this puts us at a very critical area as we move into earnings next week on Wednesday the 30th with Microsoft. You're looking for a break above 402. You get above 402, then you're hunting the all-time highs back at 450. If you break down here, you're looking to buy back at 356 with stop losses just very shortly, maybe $10 underneath that. Tesla has been going sideways for a while, but if you slap a weekly chart on Tesla, it actually is not unfamiliar territory. You tend to sideways consolidate for many years on this stock before they release maybe a new model or kind of go into a new stage, if you will, of their business. I believe we could potentially be making an uptrend here. This has been intact since 2022, so you're now going on 3 years. Now, you have to suffer and you have to understand you're going to have some big swings on this one. You've got as low, at least on a downswing, to 163, and you've got as high as nearly $500. But if this trend continues, you actually could make a new higher high up here, back up into the $500 range. That'd be an area where you'd probably take profits and then look for another swing lower. But Tesla's technical pattern actually looks pretty good, not just from the long term, but now the intermediate term is starting to look better. And obviously, if they can get those robo-taxis on the road and prove that they're going to get some revenue there, investors will look at the revenue opportunity there with like an infinity sign on it. And I'm not saying that's how I'm analyzing it or that's how it'll play out. But with Tesla, you get a lot of irrational exuberance, and you get those robo-taxis on the road, and there are going to be people saying, oh, that's $1 trillion business on its own. And considering the valuation right now is at 916, probably could rally into the 500 just on the backs of the robo-taxis dropping some people off in Austin, Texas, and San Francisco. Folks, that was the FAANG Stock Recap Show for Friday, April 25th. My partners are saying, Colin, we got to raise the price, bro. You can't give small cap research and blue chip research away at this price. In fact, you have to sell them both for more than what I'm selling them at a combined price. And I was like, guys, we got to give the faithful that have stuck with me for years and have really helped launch my career in finance here on YouTube enough time to figure out if they want to subscribe to Equity Empire. I would strongly recommend it. In this time, you need a level head. You need somebody with experience. And again, on April 12th, I sent out some buy alerts. And you can imagine what has happened to all those stocks since then. And we are going to continue with more and more of this as you go forward, not only on the blue chip side, but the small cap side as well. Thank you all for being a subscriber already. Really appreciate it. It's been overwhelming, the support, and we're really excited about the year ahead. Hopefully you guys enjoyed today's video. Be safe this weekend. Have some fun. Maybe check on who your favorite football team drafted. Hope you got a good season coming up too. We'll be back next week with Meta, Microsoft, Apple, and Amazon earnings. Until then, good luck with your investments.